Edgeful.com just released a new free trading tool, and it is a risk calculator. We have a version that is completely public, no account creation required, no email. You just go to edgeful.com/trading-risk-calculator. So if you just type in edgeful.com trading risk calculator, I'm sure it'll come up. If you're inside of the Edgeful app, you're going to see it right in the sidebar. It's going to be right here. I'm going to walk you guys through exactly what it is and how to use it. If you're a struggling futures trader, pay attention. Edgeful.com just released a completely free 5-day course that will help you become a better futures trader. Number 1 is going to be how to stop sabotaging yourself and your trading. Number 2 is going to be the IB setup, how to find data-backed entries, stop losses, and profit targets. Number 3 is going to be how to avoid choppy price action. This is a huge piece for futures traders that you need to figure out. Number 4 is going to be how to find a data-backed bias every single day, so no more guessing if price is going to go up or down. And then number 5 is going to be algo trading versus manual trading and what are the pros and cons of each. Make sure to sign up at edgeful.com. There's only 2 things. This is very simple. I think it's very powerful, but very simple. There's only 2 things that you can do. Number 1 is you put in your account size or your max drawdown. When I say account size, this is going to be for if you have personal capital. Let's say you have a $10,000 account, you're going to put that number in here. If you're trading with a prop firm and you trade a $50K with a $2,000 max drawdown, you don't want to put in $50K, you want to put in $2,000, right? That's your max drawdown. That's really what you're working with, right? So in this case, if we're going to do a 10K drawdown, let's pretend that you have a 150K account, 10K max drawdown. Right here, we just have the default risk per trade to be 2% or $200. And right here, you can see that this is very conservative, risking 2% of your account per trade. So this section right here is risk per trade in terms of percentage of your account. So if I make this, call it 5,000, you're going to see 5,000. You're going to see this will double, right? So risk per trade is the same. We're risking 4% of the account. So what I want to do now is change this back to 10,000. So we have risk per trade here. And then now we have, this is really important, the number of consecutive losses that you can take until you blow the account. This is a worst case scenario calculator, right? You can take 50 trades in a row that are losers and you will then blow the account, right? So if you risk $200 50 times with a 10K account, you have 50 trades that you're giving yourself. That is a great, you're very conservative. That's great, right? So let's just say now, and then also, by the way, we have our recommended risk per trade. This is always going to be 2% of whatever your account is. So if you go to a 100K account, the recommended risk per trade is going to be 2% or $2,000, right? So if you have even if you do a 5K account, your recommended risk per trade is going to be $100, right? It's always going to be that 2%. Now I'm going to focus still up here for just a second. If you want to call it, you can see the guide right down here, but let's just say you want to risk 400 per trade. Now it's moderate. It's not, I wouldn't say it's conservative, but it's moderate. And now you're risking 4% of your account. You can take 25 consecutive losing trades before you blow the account if you have a 10K drawdown and you risk $400 per trade. Then let's go to 800. Right, you can see these colors are getting darker and darker. So you can see we're at the orange section now. This is relatively aggressive. Risking 8% of your account is definitely aggressive. You can only afford 12 consecutive losers. And then like what most people will do, which is what we obviously don't recommend, is you have a 10K account, you risk 20% of it, you risk $2,000, and now you're risking obviously 20% of your account. And you only give yourself 5 consecutive trades before you blow the account. Let's scroll down for a second and talk about this section here. The probability of blowing your account based on different win rates. So we have 4 different templated win rates in here that you can't change them. We have 40%, 50%, 60%, and 70% win rates. Now, based on the number of consecutive losses that you can allow here, these numbers are going to change, right? So I'm going to explain to you, I'm sure you guys have seen this graphic here. This is part of this here. So if you have so what this says here is chance of 5 straight losses with a 40% win rate over 100 trades. It's a 100% chance. This is extremely high risk. Chance of 5 straight losses with a 50% win rate, 95%. Chance of 5 straight losses with a 60% win rate, 63%. Chance of 5 straight losses with a 70% win rate, 21%. So what this means and how are you going to apply this? If you want to risk 20% of your account, or pretty much risk your account in 5 trades, you need an extremely high win rate in order to be able to survive, right? While risking 20% of your account per trade, you need an unrealistically high win rate to be able to survive a 5 trade losing streak, right? This is where this is coming from, right? So this number here, the number 5, puts us into this category here, this column, right? So I'm going to do this, and I'm going to do this. And you can see where each of these are coming from. So you can see 40%. I'm going to go to 40%. You can see there's a 100% chance that I take 5 losers. I go to 50%. You can see 95% chance that I take 5 consecutive losing trades. 60% obviously is going to be over here. 70% is going to be over here. So the more that you want to risk per trade, obviously the higher win rate you need. Now, if you drop this down to, let's just say 1500, you're going to see that over here, these numbers are all going to change. This is dynamic. So this is going to allow you to really see what is high risk and what is not, and how many consecutive losing trades are you able to take based on your account size, based on your drawdown, based on how much you're risking, and what type of win rate do you really need in order to have a chance risking that much. So very simple. There's really not much else on here. We are going to add more stuff to this over time. If you guys want us to add something in particular, please reach out to our support in the Edgeful app right over here and just say, hey, listen, I would love to be able to choose my contract. Like I want to look at NQ. I want to be able to calculate my position size or whatever else. We'll be able to accommodate that over time. What we want to do is first release this so you guys can use it right away and then start to add things to it. But at the moment, we really want you guys to get an understanding of, hey, if you have a 10K drawdown and you're risking $1,500 per trade, I mean, you need a 60 or 70% win rate to really make it work over time. It's not over the course of 1 week, not over the course of 2 weeks, but over the course of the long term, you're going to need a very high consistent win rate in order to survive based on this type of risk. So I hope this is helpful. Thank you for watching.